Hey, everybody, welcome back to another edition of Market Talks with Dr. Stocks. It is the 28th of May. It is also NVIDIA Day because tonight, NVIDIA, the all important semiconductor and tech stock and AI play, is reporting earnings tonight, much anticipated. Everybody and his mother is expecting a slowdown in growth. So hopefully that's already all priced in. But there are some questions that need to be answered for investors. One is their Blackwell chip functioning again, or is it still overheating? And how is the data center growth going? That's their big driver right now. The slowdown in what was it, the Chinese ban on semiconductor chips? How is that going? How's that affecting margins, supply chains, and all of that? So that comes up tonight. I'll show you how you can get an edge, a little bit of an edge, before it happens to determine whether it ought to be a good report or not. Before we do that, I just wanted to welcome you all to the live options room of the drstocks.com site, drstoxx.com. We've been in business every market day since 2002. If you're interested in joining me and a bunch of wonderful traders of all different skill levels, some people have never traded options before, some who trade options for a living, and everybody in between, go over to drstocks.com, click on the subscribe menu, and scroll all the way down to the live options room. We've been in this room for about 5 months now, but the older room, the live trading room, is going really strong. We've got a much larger community there, about 5 years now in the live trading room. And guess what? You can put both of them together for a discount price. All right, that's enough about that. Now, I want to show you a few things before we jump over to some charts. We're going to go to Black Box Stocks, which is the place I go to for determining, the kind of option flow that's going on throughout the day, and particularly in key names or in the major indexes. Are we seeing more calls than puts? Are we seeing more puts than calls? What is the size like? Are the calls really heavy? The puts really heavy? Are people going out with time, or are these mostly day trades? What kind of strike price are they going at? Are they going, much higher than current price, or much lower on the case of a put? Or are they doing at the money, in the money? There are all kinds of interesting information that you can get from just watching the call flow. And I have my filter set at only sort of puts and calls, stocks and ETFs, but I'm only interested in those that are going off at the ask. So these are people buying, right? Usually opening a new position, and not selling. They're not getting out of a position, or they're not hedging, or they're not doing a bullish credit spread, etc. They're doing directional trades at the ask or even above the ask if they're really desperate to get in. And I start off at $100,000 minimum amount per trade, and sometimes I go up even higher than that. So just to let you know, that's the screen here. And you can see right now, we must be in a bullish phase, because I guess I'm only looking at Tesla. Let's go back. Now I'm looking at all the stocks that are coming through above $100,000 each. You're going to see some, of course, common names in here. Someone likes gold, right? We've got QQQ, NVIDIA. I'm sure we're going to see a lot of NVIDIA. I want to look at that in just a minute. Here's a Tesla put. Here's a SOXL. That's the 3X bullish version of the semiconductor index, with a pretty big block, $379,000 at a strike price of 20. Current price is 1750, and they're going out to November. So that's a pretty bullish bet on Soxel. They paid 3.7 for that, so it needs to get up about $24 per share from current price of 1750 for them to even break even. Now, here's how I use this information, because you could stare at this all day long and not really be sure what you're looking at, and not sure how to trade off of that information. This is what I typically do. Now, if I'm interested in a stock, let's take NVIDIA, because everybody's interested in NVIDIA today. And before I buy shares, I tend to jump over here often to see, hey, what's going on today in the option flow? Is it more bullish than bearish? Are they just day trading the stock, or are they looking for long-term investments? And the way you do that is you just click on the ticker symbol that you're interested in, not Tesla. Here's NVIDIA. Click on NVIDIA, and this will give you every trade that happened today over $100,000 per share, and there's a lot of them. Look at this, lots and lots and lots, lots and lots. And just eyeballing this, you're going to see probably 6 or 7 calls for every put that you see out there. And of course, on a evening before earnings, you're going to get some puts out there, people that are long the shares, but they want to hedge against a market pullback on the report. So no surprise we're seeing some puts, but a bit of a surprise maybe that we're seeing a lot more calls than puts. Now let's see what the big guys are doing. Sorry, I didn't want that. Let's see what the big guys are doing today. Let's get rid of the 100 and let's go up to 500, right? Calls, calls, calls all the way down the line. So from about 1 o'clock today, it's now 2:15. From 1 o'clock today for the last hour and a quarter, it's been all calls at that big strike price, at the big high price. These are deep-pocketed traders. They're professional money traders. They're smart money traders. They're probably managing funds. They're managing, what do you call them, family funds and family office funds and otherwise. And so they are bullish, looking good into NVIDIA tonight. If we go back even earlier in the day, you're going to see again, look at this long string of calls. Now let's do something fun and just see what are the guys with the really deep pockets, those that can afford over $1 million per trade in NVIDIA. What are they doing today? All right, well, there are a few puts out there, we have to say. There are a few, but most of them, I would say 85% at least, of all the calls being bought today over $1 million per trade, all calls, right? All bullish positions. 1.6 million, 3.5 million, 1.8, 1.4, 3.3, et cetera. 19 million. Look at that, 19 million. Now let's zoom in on this trade because this is an interesting, that's a big, big block, right? You don't put $19 million down on NVIDIA on the night before earnings without having a very confident anticipation of a positive market reaction. So that's a very good sign if you're bullish on NVIDIA. Very good sign. Now, they're going out to March of next year, so they've got some time. Current price of NVIDIA is 136. They've gone deep in the money, 110. That's a 26-point spread between strike and current price, and they paid $39 for that. So one of the advantages of the in-the-money puts is that it doesn't take too much movement in price because of that almost a 1-to-1 ratio, what they call the delta between the option premium price and the price of the underlying stock. So pretty much for every dollar that NVIDIA goes up, the option call will go up $1, maybe 90 cents, something like that. And so that's the advantage of doing in the money. The disadvantage is you have to put out a lot more cash, right? You're putting out $3,900 per contract, and they bought $4,882 contracts worth. I just want to click on this to see if this is the only trade this guy has made, or are there others? Yeah, it looks like his only trade today. Otherwise, you would have seen a series of trades at the same strike, same expiration, and we're not seeing that. Okay. Just out of curiosity, if that is indeed a, whoops. Oh, well, I just mucked it up. Okay, I'm not going to go back. I just wanted to show you that. Let me show you a couple of other ticker symbols here. UNH, we bought some calls today in UNH, and I'll show you why. Yeah, call all the way down. Over $1 million each trade, big money. And this is the same guy. How do I know that? It's the same strike, and it's the same date, expiration, and the timing of these are right in line, right? From 1044 to 1049. So within 5 minutes, the same guy executed 7 or 8 trades. And I saw him yesterday, and I saw him last week. So somebody is piling in maybe the $50 million, $100 million by now into UNH calls. He's got time. He's going out to December. This is pretty much of an at-the-money strike, right? At-the-money strike. So, yeah, it's right at 299.90 right now. So it's just under 300, and he's going at the 300 strike. That's at the money. And he is piling up a bunch of bullish, leveraged trades on UNH, anticipating a good run somewhere between now and December. He's paying $4,500 for each of these. So UNH has got to get to 345 for him to break even. Current price is 300. So 300 to 345 is a good 15% move or so between now and December. That is a good move, right? Especially for a big Dow Jones sluggish blue chip kind of company. And he is anticipating that happening. All right, so that's how you use call flow. Let me show you something else, a nifty little trick. Now I need to go to a different site here. I'm going to go to TipRanks, and I have that. I have it bookmarked, but the bookmarks are covered by the. Let's just type it in. TipRanks. There it is. Okay, so you type in NVIDIA, right? The stock you're interested in. Now you do need a membership to this site if you want to access all the features. You'll get some things for free. I'm not sure the thing I'm going to show you get for free, but if you do have a premium membership, which I do, and it's like $300 a year, it's not that expensive. It really is worth it, and I'll show you why. So, first of all, you get the overall consensus for all the analysts that are covering NVIDIA, all the major analysts covering NVIDIA. There are over 7,000 analysts in the TipRanks database. They rank each one, this is important, they rank each one by whether, when they give a buy, what do you call it? They're saying buy stock, buy NVIDIA stock. I forget what you call that. It's not an upgrade. It's not a downgrade. It's a something. It's an analysis of some kind. And when they come out and they say buy NVIDIA, from that date until 12 months later, they monitor the return of the stock. Did it go up or down? Right. That's the first thing. And then how much did it go up or down? And then they have a database or some kind of algorithm where they determine the ranking of those two key points of data. And then they can rank all the analysts that are out there on a scale from 1 to 7,000. So the guys that are up in the top 10 or top 20, those are the only ones you want to pay attention to, right? Because they're the ones that are really doing really well. They've got a great track record. Most of their picks go up, and most of the picks, when they go up a fair bit, and when they go down, they don't go down very much, right? So looking at an average return on every pick that they have. Then you can scroll down, right? This is NVIDIA. We know 37 ratings, and consensus is on a buy, strong buy, and the upside price target, average consensus over the next 12 months is a 20% return from current price. That's pretty good because most of these are probably going to be a bit on the conservative side. Then you scroll down from there and you want to start looking at how many of these analysts are 5 stars. The 5 stars are the guys that have more picks going up than down and at a positive net percentage return per pick. And when you've got those two in good numbers, you're going to get somewhere between a 4 and a 5 star, and the best guys get the 5 stars. So if you have a whole bunch of 5 stars following NVIDIA, and if they're all out on a buy, and if they're all out there with some pretty nice looking price targets, right? Here's one at 46% from Cantor Fitzgerald, and his success rate is 63%. That's pretty good. And his average return, including losses, is 22%. That's very good, right? That's more than double the S&P 500 average return. So CJ Muse, when he speaks, you got to listen because he knows what he's doing. And I like that price target. And this was just out yesterday, 527. So the recent 5 stars, good price targets, right? You start to see a pattern forming here in all of this stuff. And you're going to think, because all of these guys came out, and a number of them came out this week. Some came out last week. You're not going to give a reiteration of a buy on NVIDIA if you think it's going to tank on earnings. Right? You're just not going to do that, not if you want to maintain your 5 stars. So all of that's good. Here's something else you can do. You go over here, AI stock analysis. This is a new feature of TipRanks. I don't think you'll get this without the membership. And you're going to see a rating over here. It's a scale from 1 to 100. 80 is very good. You're not going to find too many up there in the 90s. And 80 is, I think, above 75. It's an outperform rating. So NVIDIA looks pretty good. I don't know why the price target is down here at 131 because that doesn't match what we just saw. It's an AI thing. I don't know where they're getting their information from, but it helps, I think, to understand what's the market looking for on a positive basis, right? What are the things that we want NVIDIA to come out saying, hey, we really did well in these areas, and what are the potential red flags that could come up during the conference call? And if we don't hear anything about those, that's probably a good thing. And if we hear, a good CEO will be able to talk about the negative things in a positive light. So if they can spin these things with some hope that they're overcoming them, or they're working on them, or they're hiring some new people to work on them, then the market could potentially be quite happy, even though there are some red flags being flown out there. Okay, so that you get over here in the negative factors. You're going to see historical earnings, relative strength performance, and on and on. Here's a chart of here's the chart of this is interesting. So this is what AI is expecting to happen on the conference call that we'll get tonight. Some positive things, right? And what the guidance will probably look like, what it's expected to look like, and then some highlights and some lowlights. If you've got more highlights than lowlights, that's, a thumbs up, right? Earnings history. Here's the thing about NVIDIA, right? So last quarter, they've always beat expectations. I don't think that's going to be a problem at all. Expectations have come down a fair bit. But you can see last quarter they earned, they estimated was 85 cents per share. They reported 89 cents per share. That's a pretty good beat. Tonight, they're expecting only 73 cents per share. So growth is slowing. That's why I think NVIDIA's stock is not up at all-time highs, even though it's making more money now than it ever has in its history. It's just that some of the margins have gotten squeezed. Some of their costs are getting a little bit higher. So their earnings per share is going to come down in this quarter. Now, it's only one quarter, but it's a rare thing for NVIDIA to report less earnings in one quarter than the previous quarter. You can see every quarter has always been growth, growth, growth. Now, you can also look at sales. It's kind of the same story. I'm not sure there is an estimate over here. Oh, there is. No, there is no estimate over here for quarter two. So I don't know, unless that's already reported. So I guess we'll have to see what sales are coming out. But I'm pretty sure that the estimates are a little bit lower than they were last quarter. Earnings history right here, beat, 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 beat. And where did, the increase growth of EPS per share? Here's your first, well, that's back in 23. Never mind. That's old news. So this is what we're looking at here for the May 28th. Last year at this time, it was 61.2. But if you look at it on a quarter-by-quarter basis, it was higher, right? 89 cents per share last quarter. So it's coming down on a quarter basis. But on a year-to-year basis, still looks pretty good. Okay, that's all I wanted to show you there, just to let you know that is a nice tool out there. Now let's go over and take a look at some charts. I wanted to show you this new symbol here, NVII. You might guess that this is related to NVIDIA, and it is. I have a friend in the business. He puts together exchange-traded funds. He has a company that does that, and they have a lot of these kind of interesting hybrid funds. They do several on Bitcoin, and some of the big names like Avgo and Tesla and others, where they leverage the shares of the fund. So it's like maybe 1.5. I think in this particular case, it's 1.25, the shares, the underlying shares. And then they sell call premium against that leveraged share price to earn some income and reduce cost basis. So it's an interesting hybrid. You're exposing yourself to leveraged price of Nvidia, but at the same time you're mitigating risk by selling call premium. But that, of course, will also cap your overall gains. If that's of interest to you, take a look at NV. I have no idea what the expense ratio is or anything like that. It just started trading today. I got an email from my friend saying, "Hey, can you give us a little publicity?" So this is my attempt at that. All right. Now let's take a look at the major indexes. Here is the Dow, and I'm just taking a look at the 5-minute charts. In fact, let's take a quick look here at the 5-minute charts. Okay, so the Dow is kind of struggling a bit because a lot of here's your heat map. Healthcare is a big part of it. Energy has gone red today. There are a couple of utilities in there. The industrials are part of the Dow. The big banks are part of the Dow. The tech index is holding it up pretty well. Other than Microsoft, most of the mags are doing pretty well today. But the Dow is, it's not a tech index, and it's not diversified like the S&P with 500 stocks. It's tightly concentrated, just a handful of big companies from each major sector, and most of the sectors aren't doing so well. If you go over here and look at your breadth indicator, it's 67% of stocks today are falling, and that's why you're seeing a fair bit of red over here, with the exception of a handful of big blue chip tech stocks. And I'm afraid our UNH has gone red. It was bright green when I last looked at it before my break. Anyway, that happens. Actually, I don't think it's there. Where is it? It's still green. I'm sorry, it's still green. I take it back. Yeah, okay. So you can see, though, the NASDAQ is flirting with getting back into the green after a green open. It opened up. It was a smash off the open to trap the bulls. And then it hit some lows, probably sucked in a bunch of new bears, thinking, oh, we're going to go all the way back and close the gap yesterday and start to retrace the pullback that we had last week, start to continue that. Yesterday was just an aberration. Those are the bears that got sucked in this morning, and now they're trapped. At least they're trapped in the NASDAQ. And I like what's going on in the S&P 500, right? You've got this nice rounded bottom. Here's your little handle. We had the FOMC minutes come out. It didn't knock it down. It didn't really give much of a boost either, but at least if we can get back up above that little pivot high right there, we should see the S&P 500 close nicely today. Russell is it? No, it's not outperforming, but I do like that it is forming the same kind of thing. Rounded bottom. Rounded bottoms are always more bullish than V bottoms. Keep that in mind. Nice little base right here, a flag or cup and handle. But we do need to see a bit more bullishness. Now, I did expect some back and fill today, and I said two things in the room, both rooms this morning. I said, if we can close above yesterday's high, by the time we get out to 4 o'clock, and it's only 2:30 right now, if we can close above yesterday's high, and I don't think we're going to get there because it's still above where we are, we get a follow-through day, and that will confirm yesterday's big green stick as a legitimate breakout move, because it broke out. We'll see this in the charts. If we can close somewhere in the top third, which is where we are now, if we can close in the top third of yesterday's big green stick, it's not a confirmation day, but it is a pause. And it's a bullish pause, right? Because we're saying that, hey, the gap down below, we're not going there. The opening price yesterday, we're not going there either. We're much closer to the closing price than the opening price. That's a bullish look and could very well set up a nice rally tomorrow if and only if NVIDIA comes in nice and warm. Now, the other thing that's happening tomorrow, we need to keep an eye on this. Where is it? We've got some big data out tomorrow. So today's Wednesday. We had the FOMC minutes. Tomorrow we get GDP. We get chain deflator, the GDP deflator, which is a read on inflation, right? It's the GDP minus the inflation. So if that's really low or even negative, then you're going to have some problems. Initial claims. We don't want to see jobless claims get up above 250. I don't think they will. Last week it was 227. We're expecting 230 this week. We'll probably come in pretty close to inline. The jobless claims number tends to be pretty well calculated. The jobs number that we get every month, not so well calculated. That's always a surprise. Now, that's happening tomorrow. And then on Friday, we get retail inventories, we get PCE prices, which is the Fed's favorite indicator for inflation, and then Chicago PMI. And finally, at 10 o'clock, we get consumer sentiment. All of that data taken together in the next 48 hours plus NVIDIA will move the tape and create whatever the next leg of the market is. We're not there yet, so we don't know what those numbers are going to be, but just letting you know that's on the horizon. Okay, so we actually have a little bit of a volume shelf. Let me show you that, where just above the 200 here, we were up there a couple of weeks ago. We had that 4 or 5 day pullback last week. It was pretty sharp at one point. Nice close off of the 50-period moving average on Friday, and then totally reversed yesterday with a big green stick. And here we are. We did get above the highs yesterday for the Dow, just briefly, right off the open, and then we're down below that. We're a little bit off the lows, but here's the bullish thing. We are up here well in the top third of that green stick. That's a win for the bulls. It's just a pause at the 200. We're also at the blue zone of the LRC. There's a volume shelf not far away. So it's going to take a little while, right? The market needs to consolidate and discount and do its thing before we really get generation to poke through that volume shelf. But the way the market is heading, the way the tariff fear has been subsiding, the way inflation is coming down, all indicators are pretty good. The one thing I'm most concerned about here is this guy right here. The yields are still bouncing. We had 3 big down days last week after a volume shelf test. Hit the 21 EMA yesterday, and it's been bouncing today. Now, volume is light, but it's light all across the board. If we can see a little bit of a back and fill move today and yields come back down tomorrow and bonds go up, of course, we'll be looking at a much healthier macro for the overall economy, and that's what we want. The S&P 500, so 6,000 is the number. We're not quite there yet, right? 6,000. This isn't the SPX. Let's take a look at the SPX. There it is. So 6,000 is right here, just a bit above where we are. We're coming back into, after a 4-day pullback, we're coming back into last week's high. That's very good. We're up in the top third of the candle. We're nowhere near the open yesterday. We're not entering back into that gap. If NVIDIA crashes tonight, that may happen, but we're not there yet. We don't think that's going to happen. And yeah, right now I have to say that I just think this is a little bit of a pause. A little bit of a pause. Yeah, we're getting a rollover in the MACD. MACD is a lagging indicator. It had come a long way off the bottom. It's probably due a bit of a cool off. And RSI is beginning to fall a little bit. We're below the 10-period moving average. But that's reflecting the 4-day pullback, not necessarily what's happening now, right? These are lagging indicators, so keep that in mind. Take a quick look at the 2-hour chart, which is right here, and you can see here's that pullback, big pullback, nice rally off the bottom. Volume all throughout was pretty good. We came back down into the pink zone of the uptrending LRC on Friday. Big green stick yesterday with follow through. It was a gap and go, bullish gap and go all the way. And now, if we zoom in a little bit, we can see that we're mostly just going sideways, just consolidating this move. This is the target up here, 5970, and then 6,000 for a real test. And then after that, we'll look at all-time highs. Now, NASDAQ, all-important NASDAQ. Let's get back to the daily chart. So I really like, and I hope I'm right on this and not wrong, but I really like that. When you've had a long downtrend, and we've been in a, below all-time highs for about 6 months now in the NASDAQ. When you have that sort of a prolonged pullback, you want to look for bottoming patterns. And I have to say, this one right here is a pretty good one. The inverted head and shoulders, very reliable pattern, tends to mark bottoms of pullbacks. It also can mark a continuation move at the top of an uptrend. It's bullish all the way, one of the most bullish indicators. And I'm not so sure this is exactly that pattern because it's not perfectly formed, but every piece of that is in place here. You've got the deeper left shoulder than the right shoulder. The right shoulder is short, shallow, and nice strong breakout above the neckline. We've got a deep head. That's also good. And you've got a lot of bullish volume balance off on the right side of the pattern, which led, of course, to the breakout. Breakout, a little bit of a rollover into the 21. Big green stick yesterday. We've got a doji forming today. We're actually back into the green on the NASDAQ, up 13 basis points. I'll take it. I'll take it. So I really like this. Now, there's a lot of trouble up ahead. I don't want to get too optimistic here, but we do have, this is a long-term trend line, which needs to break, and that's going to be a problem. Now, slanted trend lines, like what I call an RTL, a resistance trend line, are not as strong as the volume shelves, which are horizontal. The big volume shelf that will prohibit us from getting to all-time highs is that pink one right there. And we're not there yet. We still need to get back up above the RTL, and that RTL goes back to, it starts at the all-time high. Maybe that's a little better, right? So there's still a little bit of room to the upside, but once we get up there, we'll probably see a bit of a pullback, and then we get the charge higher. I think June's going to be very good, by the way, for the NASDAQ. I'm seeing a lot of good tech stocks that's setting up very nicely. Might be a little squirrely here at the end of the month, but I think once we get to June 1st, it's the final month of the second quarter, and it's the start of some bullish seasonality as well. June and July tend to be pretty good. August kind of mixed. And no, I think the NASDAQ is going to have a nice run in June. Okay, small caps, always a bit of a problem, right? They, if they're not outperforming, they tend to be underperforming, and that's what's happening today. But what I like about the small caps is that they had a big flush out day, big hammer candle that got actually below the 50, flushed out a whole bunch of stops. That's a very good thing. It's a bullish thing. Flushed out a whole bunch of stops, sucked in a whole bunch of fearful bears, and forced a lot of people to the sidelines. And then it was right back up, follow through day yesterday, and we're up in the 1/3 top of yesterday's candle. It's not really a very strong chart, but as I have been saying on the main social media boards, you're seeing it's not broken out like it is in the NASDAQ, but you are seeing the same bottoming pattern forming here, and it's a nice one. Deep head, shallow right shoulder compared to the left shoulder, fairly horizontal neckline, and we are getting up there. We're approaching the door to break the neckline to the upside. There is a volume shelf right there. We're right in the thick of it, right at the underneath it. So that could cause some, a few days of consolidation or some traps, some bull traps as well as bear traps. But I think once we get out to June, small caps might be a very good place to be. We went long some oil earlier this morning over in the other room. I do think that this also has the potential of an inverted head and shoulders bottom. The OPEC meeting is going on, so there's a good macro behind this trade. And if it gets out above 63.74, it should go all the way to that volume shelf around 72. And it's only at 62 right now. Bitcoin is is a bit sluggish today, and it was sluggish a couple days ago. And I just think we're printing a bullish flag here. We got out of Bitcoin yesterday. We took profits. I would like to get back into Bitcoin, but I would like to get this a little bit lower, take a little bit more of the risk out of the trade before we do that. Okay, let's take a quick look at gold. 3,300 is a very key level. The lows of the day were the lows yesterday, and the lows the day before, and the lows the day before, and the lows the day before. If you look at an hourly chart of gold, it's a very clear trading range in the last 4 sessions, 5 sessions now. And the daily chart is showing also a fairly tight trading range at the top of an all-time high bullish run. I think gold will make a bullish move from here, testing the upper limit around 34.35 within the next 6 to 8 weeks. I'm modestly bullish on gold, uh, and I'm not exactly sure why, but the dollar has to fall, the rates have to come down, and there has to be at least a little bit of fear around recession and inflation. We definitely have all of that in the mix, but gold has been pretty quiet lately. So we'll just have to see. Maybe all of that is kind of at a peak. I have a little bit of gold myself in the Micro E Mini, this MGC, and it's an old trade from about a month ago, and just kind of hanging on. I took a little bit off when it spiked there, but I'm just hanging on the rest for at least another test of 3,400. Okay, let me show you a few mags. So we'll sort these best to worst. Let's do best. Avgo, we've got shares of Avgo in our long-term portfolio in the other room, the live trading room, and then we just did a little swing trade yesterday in AVGX, and I'm going to hang on to that because this is just a beauty, absolute beauty. Maybe the strongest semiconductor play right now in the market. I really like this setup, and let me show you why. So, like all tech stocks, and especially the semiconductors, they had a really sharp drop off on tariffs and China problems and supply chain stuff and regulations coming out of the EU, among other things. And then they just went skyrocketing north. Not all of them, but some of them did. And some got a little stuck with earnings, and some did really well on earnings. So it's been kind of a mixed sector. The guy leading the whole group is this guy right here, and it is coming into earnings soon. We're not going to hold AVGX over earnings, but we will hold AVGO over earnings. And here's the thing, right? Look at this pattern right here that formed just before it broke, to the upside yesterday. We're into a thick volume shelf. The one up above is probably a little bit thicker. I'm not sure of these colors. They're purple and pink, and I'm not sure which one is the sharpest or thickest. I would think purple, right? It's darker. And we're going right through it. So that's a very good sign. Now, here's the thing. You're going to see this a lot on earnings, but if you get a big gap up like this on news, this was the China tariffs being delayed, I think it was, right? It was a China weekend. Trump likes to give big positive announcements over the weekend. So, buy your stocks Friday night and sell them Monday morning, and it's probably a pretty good trade. When you see a big gap up like that, that is the market reevaluating the company, saying, you are no longer a low $200 stock. You're now a $230 stock. You don't deserve to be down there any longer because your growth is so strong. Your margins have expanded so much. You've got new products coming online. You're worth it. You're worth it. Way up there in the 230s, 240s almost now. And when gaps don't fill like that right away, that's when the market is giving a big thumbs up to that new valuation. And when that happens on earnings, even better, because you really want to see gap ups on earnings that hold open. Even if the market gets a little squirrely, you want to see those earnings gaps stay open. They can come back to test the top of them. They can maybe dip into them for a little bit, but you don't want to see that gap close. And that's what's happening here with Avgo. So here's NVIDIA. Similar chart, not quite as strong on a relative strength basis, but here's the same pattern. You're going to see this in a lot of tech stocks. Bull flag, very well formed bull flag, good volume balance for the most part, and gaps that have not filled. All good. Breakout yesterday, confirmation, follow through day today, just like on Avgo. Right? A follow through day is when you get a big up on day one, and then day two closes above the high of day one. That's a follow through day. And if it's on good volume, so much the better. And if it's a green candle like this one, even better still, right? So Avgo's got that. And Nvidia's got that. Let's take a look at Facebook. Facebook, you can see now, Facebook is a little weaker, right? It's not as strong as those guys. Now, maybe because it already reported earnings and earnings were good, right? It was a gap in crap, but the gap stayed open and it carried higher from there. And but you can see we're still under the highs of that flag. And today, although it's better than the market, today is still a little bit on the weak side. Apple is still, for me, a no-go zone. As long as it's under the 21 and the 50 and with a downtrending LRC like that, and it's not even up near the blue zone, it's under a volume shelf. There are all kinds of technical reasons why Apple is just, okay, now I have Apple in my family fund. I don't plan on selling it. I recommend Apple as a long-term position, but not for a swing trade. No, 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 unless you want to short it. All right, let's do one more. Qualcomm. No, let's not do Qualcomm. Let's do, how is Amazon looking here? Yeah, about like Facebook, right? Big up, pull back into the 21, the 200 period moving average. Big day yesterday, follow through day mostly today. We're not above the high though, so it's more of a bullish look rather than a follow through day. Last look at Tesla. We got out of our Tesla calls yesterday for a very nice gain. I think that was the right move. It needs to cool off a little bit. It's starting to get a little bit ahead of where the company is now. Where the company will be 3 or 4 years from now is, I think, just off the charts. I have it in the family fund. I'm not going to sell maybe for 5 to 10 years as long as Musk is still a part of it. But for a short-term swing trade, I do think it's gotten a little bit ahead of itself, needs to cool off, but we'll keep an eye on it. I wouldn't mind getting back in maybe by Monday, Tuesday next week. All right, guys, I'm really running out of time, but let me just see if we can do real quick. Any ticker symbols you're interested in that we haven't already talked about. Any ticker symbols? If so, you can type them in the main room there, the live options trades room. And if I don't see any, I'll just wrap this up. I'll go ahead and produce the video, put a link in the room, and we'll get back to trading the last hour. It's an hour and 10 minutes before the closing bell, and then we should get NVIDIA. I think they typically come out about half hour after the bell. I don't know that exactly, but it'll be a little bit of a delay. All right, I'm not seeing any. I think we covered all the main ones. Let me show you one that I didn't talk about that I did buy a few shares of today, and this is ARM. It's another, it is another semiconductor stock. It looks just as good as NVIDIA, maybe not quite as good as Avgo, but it has already broken out of a perfectly formed inverted head and shoulders with a horizontal neckline, shallow right shoulder like everything else. Bull flag formation here, big up day yesterday, follow through day today, very good volume balance. And it is ARM being a big supplier to NVIDIA. So yeah, big thumbs up for ARM. And the other one that we did buy officially in the other room is PLTR. It's not really doing what we would like it to do today, but it is an inside day bar. And it didn't have a very good day yesterday. So when the market was just going up and up and up, it was falling off of its open. But I like that it is an inside day bar. When you have a pullback like this, and then you get an inside day bar at the bottom of that pullback, it typically spells the end, the pullback, and the beginning of a new leg higher. So keep an eye on the PLTR. It is, of course, a must-own stock in the AI/defense space. God bless everybody. Have a great rest of the afternoon. I'll be back in the room in a little bit after I produce the video, and then we'll go from there. Bye for now.